Hello, everybody. Today, we are going to discuss key accounts to audit when conducting your period end close, gift cards, and catering deposits. The purpose of the period end financial close is to verify accuracy so you can understand where your money is going in order to make smart business decisions. When closing out the period, it should start with a review of the financial statements. Focus should be on locating specific adjustments needed and identifying why they occurred. Was all activity captured? Were the items rang through the POS correctly? Understanding why certain activity occurred will help you determine and establish where operational development opportunities lie in order to put action in place to coach and develop your team. Now let's dive into gift cards, which is one of the most important balance sheet accounts from a cash flow perspective. There are several factors that could cause gift cards to go out of balance. All promotional gift cards that are given away without charge still need to be rang and recorded through the POS to ensure that the liability is captured. If you are a multi-unit concept, gift cards are often sold at one location and redeemed at another. This means the liability is captured at one location, but the sales are captured at another location, which causes the account not to balance when reviewing each location's individual balance sheets. Some POS systems allow you to reload gift cards. If your POS allows this, please verify that all activity is captured on your daily sales summary reporting and properly tracked when recording sales. Lastly, if you use a third-party service that charges fees to sell your gift cards, you will need to break out the fees in order to properly track the liability versus the advertising expense, which are the fees. If gift cards are overstated or hold a positive balance above what will be redeemed, you should always default to the POS and review what was rang in versus what is reflected on the trial balance. Once you identify the activity that is incorrect, communicate with your accountant to enter the journal adjustments. If you are a multi-unit concept, you can run a side-by-side balance sheet to get the total liability at each location and compare it against the totals from the POS report. If the balance is less than what will be redeemed, you should pull the trial balance and the POS totals and compare them to isolate missing or incorrect activity. Once you identify what is causing the accounts to be out of balance, contact your accountant to request the needed journal entries. As listed above, if you have multiple units, review the consolidated total to determine errors against the POS reporting. If you are selling third-party gift cards, verify that all fees have been recorded and properly allocated. Gift cards have a direct impact on your cash flow. In certain seasons, gift card sales will increase, which in turn increases your cash flow. However, when those gift cards are redeemed, you are not generating cash flow. You are simply reducing your liability. Forecasting is critical to understanding gift card utilization and planning cash flow in slower months. Now let's review best practices to ensure that this account stays balanced in the future. Coaching your team to always ring gift cards through the POS is the best way to keep the account in balance. If the POS has the ability to reload the gift card, verify those sales are captured when you're entering sales. Lastly, if there are fees associated with third-party gift card sales, assess the value of the partnership with that company to determine if it is a worthy investment. If you decide to use them, verify with your accountant and your POS provider that you have it set up correctly in your POS. Conducting these audits will allow you visibility into your cash flow from the ebbs and flows of gift card sales. Now let's move to catering deposits. Catering deposits reflect money that has been received but not yet applied. Cash flow considerations with this income should be taken into account to ensure that labor, food and materials can be provided at the time of the event. Understanding the balance of what is outstanding in catering deposits allows you to plan cash flow as well as verify that all funds are received for each event that you host. If not properly tracked, these accounts can get out of balance and tracking the activity can be time consuming. To avoid the account going out of balance, train your team to verify that the total amount closed to the catering deposit non-cash tender matches the amount of the actual non-cash tender. When entering the deposit, verify to make sure that it is recorded to the appropriate liability GL. And if any refunds or adjustments are made for the event, those need to be reflected against the same liability account. If the catering deposit account is overstated or positive above what will be redeemed, review the POS reports to determine the total amount that has been closed out to the redeemed deposit tender. You can then compare that to the trial balance to identify any missing or incorrect activity. Verify that all money that has been received was coded to the correct GL, and once the incorrect activity is identified, communicate the required adjustments to your account. If the catering deposit is understated or less than what will be redeemed, review the POS report to verify that more money was not closed to the non-cash tender than what was received in the original deposit. Basically just making them match. Drill into the trial balance to identify the incorrect or missing activity and verify that all money received for catering deposits was coded to the correct GL. Once you identify the incorrect information, make sure you let your accountant know so they can make the necessary adjustments. Best practices to keep this account clean include verifying that the POS is set up properly to record all activity, both the sale and the redemption. Education is always key. Take the time to train the staff working these events and ensure they understand why properly recording catering deposits matters. Lastly, conduct an audit of the catering deposit GL frequently to identify any miscoded entries in real time. The action required to close out the period is to review the focus counts discussed today and communicate any needed adjustments to your accountant. Complete the bank reconciliations if applicable and ensure proper coding. And lastly, communication with your team is critical in success. Take the time to coach on opportunities and celebrate successes. Thank you so much for joining and have a wonderful day.